The biggest wealth transfer in history has started, and the market jumped this morning quite a bit. We're going to talk about why this happened, and we're going to dive in why this is a gold mine opportunity to be an investor at this particular point in time. We have a lot of things to discuss today, so let's dive right in. Now, the reason why the stock market jumped this morning and had a nice little rally is because there was some news out that Trump was going to postpone tariffs and pause them for 90 days. This was reported as false. Not sure how something like this happened, but it did. But essentially, there's some good to come out of all of this. And one is the fact that Trump has now said that if China, because of the retaliatory and reciprocal tariffs, doesn't come to terms with our tariffs and eliminate that or come to some form of agreement, by April 9th, there'll be another 50% imposed on China. Now, this is very bad to some degree. But where it's good is that the HSI index, which is the stock market index for China, is drastically dropping. And based on Chinese economy, which we'll get into in just a little bit here, it is dropping. The economy is dropping rapidly, and they don't really have the economy to be able to fight this, especially with 50% more tariffs. And we'll get into all of that. This is what I teach my students in the Discord. I teach them to understand the market, to understand the sentiment, to understand global trade, things that are going on, to understand charting that I'm about to show you guys. And I really want you to be able to understand how to do all of this. So if you're interested in learning how to make money in a market like this and to understand when these opportunities arise, to dollar cost average to invest. And if you're new to the market or losing money, or maybe you're just not understanding how to do this, but you want to, I have a free masterclass webinar, how to understand a volatile market, how to hedge in a volatile market. Not only that, how to identify bearish signals to dollar cost average and grow your portfolio. That free masterclass webinar is Friday, April 11th, 6 p.m. Eastern, 3 p.m. Pacific. Link is in the information box below. I look forward to seeing you there. Something very important and critical to understand in this situation is that you saw how fast the market rallied this morning on a tariff pause. Can you imagine the rally, the explosion, the upward momentum that would happen if Trump were to come to some deal or come to terms with China? Like if they were to come to us before this Wednesday, or even if it was after Wednesday. But this pressure, this 30% tariff they have with an addition of 50%, it's actually 34%. 84% total tariffs. China is likely to come forward with some deal by Wednesday because their economy just cannot handle this kind of pressure. They've been in a downward spiral since 2018. I will show you the charts on that. Since 2018, when Trump put tariffs on them, their stock market has been in a downtrend. It's tried many times to break up, but it is an actual downtrend, and they're being obliterated right now in the stock market. They definitely can't hold on longer than we can. So really at this point in time, it's who can hold their breath longer. China definitely can't, with all the prop factories, prop firms, and everything they're trying to hold up and inflate with government money. That government money is not going to continue to come in if they can't export to the States. And even if they do, the amount of tariffs they're going to have to pay is going to eat into their profits significantly while boosting and bolstering us up. This is really, truly an unwinnable situation, in my opinion, long-term for China. But let me show you why this is a gold mine opportunity. Something very important that I want to read verbatim. Trump threatened to further increase tariffs on China, raising the possibility of further escalation in trade war. But what I really want to explain here is he said he would impose the additional 50% duty on Wednesday if the world's number 2 economy did not withdraw the 34% tariffs it had reciprocated towards the U.S. This announcement injected turbulence into the global markets. U.S. stocks briefly stopped their downturn on a report that Trump was considering a 90-day tariff pause. Stocks then turned to a negative again after White House dismissed this report as fake news. I feel this is critical because this was testing the waters. I feel like someone at the White House intentionally leaked this out to test the waters of what a Trump put would be like, or what would happen if he said something positive like that. I feel like this has potentially been a testing of the water, so to speak, for Trump. It's hard to say, but it seems like this was very much intentional. It slips out, and then a few hours later, after the market makes a nice little recovery in the morning, then it's considered fake news. Well, they could have said fake news earlier, but they waited until after the run. So this kind of seems a little bit weird. Makes you question if this was intentional or not. Some huge news I want to read to you guys right now before we dive into the charts. The Federal Reserve will cut interest rates 5 times this year. Money markets indicate this as Donald Trump tariffs send markets into a tailspin. Traders have priced in these 5 reductions by the U.S. Central central bank as European stock markets plunged early trading this morning. So this is pretty good. If we can even get 3 rate cuts or 4 rate cuts this year, that'll be really good. Another thing is about China's fund. A major state-backed fund in China has vowed to help ensure stable operations of the market as stocks across Asia plummeted over the trade war launched by Washington. Now, this is kind of a gray area that I want you guys to understand. What's really happening here is that China's stock market, the HSI index, which I'm going to show you right now, if we look at that, is down a lot. China's constantly down. Their market hasn't really done a whole lot of anything. It's in a constant tailspin. And I want you guys to understand how this works. A lot of factories or prop factories in China, they're held up by Chinese money, like NIO being one of them. Chinese government's constantly giving grants and giving money to NIO. And this prop is to hold up factories that aren't making money, but to continue producing products. So you have to ask yourself, where are they getting the money? Where's the Chinese government getting the money to hold up these manufacturing facilities to keep producing products? Well, they're getting them from the exports. Essentially, Trump putting 34% tariffs on China has caused them to reciprocate tariffs on us, and in turn, we're putting another 50% on them. They've already tanked over the weekend and last week, and they're going to tank even more on April 9th, because what's going to happen here is Trump's hitting them with so many tariffs, their only choice is going to be to export to us and pay the tariffs. We will bring in a lot of money to use to grow our economy, or they'll stop exporting. And if they stop exporting, all of those goods that they're selling to us and making money off of will cease to exist. How long can China continue to prop up these factories when they lose America, the biggest buyer of Chinese goods? Once this happens, long term, it will cause a collapse of China. They're already very slowly eroding and collapsing right now. In fact, one of their ministers in finance stated that their economy is likely to collapse 10 to 15% this year alone, and that doesn't even include the 50% tariffs Trump is putting on them now, or at least on April 9th. So the good thing about this tariff that they're implementing or likely to implement on April 9th is the fact that China is highly likely and probable to come to the table to offer Washington something really good. And if that happens, we will have some form of agreement and the stock market will fly. If they don't, it just means China will be absolutely crippled, because at 114%, they won't be able to bring anything in. At this moment, Trump has stated that they've already started to see money coming in from tariffs, and they'll be collecting close to $7 trillion this year in tariffs to build factories and add employment and jobs here as well. I do believe a lot of this is a tactic to negotiate better deals, because the European Union is looking to work with America on this as well. However, EU is in even less of a negotiating position than China. They have all these cars that are stuck at the ports now that they can't get in. Mercedes, BMW, Volkswagen, Audi, all these cars won't be able to come in, or they'll be paying the tariffs. So essentially, it's put the world on hold. Yes, very fearful, not sure that it's entirely a good thing short term, but what it's doing is allowing us to negotiate better deals. It's very rough on American investors, and I really sympathize with everything that's going on. I feel really bad for American investors that are losing money, and I don't want anybody to lose money. I don't want anybody to be suffering or be down. I want the world to get along. I want there to be peace. I want trade to be great. I want everybody to be treated equally. Unfortunately, America's not really being treated equally, though, because we're being hit with a lot of tariffs even before all of this happened. We were tariffed more than we tariffed any other country. That's for one. And for two, we're basically paying for NATO, and we don't even need it or use it. So it's really unfair, and a lot of it's unjust. But to keep this directed at the stock market right now, you can see HSI is dropping, and it has been dropping, and the economy in China not doing too well right now. Another piece of information about Trump's tariffs is that oil has plunged. The prices of oil fell to its lowest level in 4 years as Donald Trump's trade war raised fears about global demand. Brent crude, the international benchmark, dropped another 3.5 towards $63 a barrel, dropping nearly 15 percentage points over the last trading day. It has dropped by 30 from more than $90 a barrel a year ago. U.S. produced West Texas Intermediate has fallen below $60 a barrel for the first time in 4 years. Vandana Hera of Vanda Insight said, markets are beginning the week still in the throes of a panic. No one dares pick a bottom. So it is kind of rough, but gasoline's likely to get cheaper. This is not a bad thing per se, but it's just one of the byproducts of the tariffs that are going on right now. Oil prices are down. Interest rates are down. The slow-moving Fed should cut rates. Food prices are going down. There is no inflation, and long-time abused USA is bringing in billions of dollars a week from the abusing countries on tariffs that are already in place. This is despite the fact that the biggest abuser of them all, China, whose markets are crashing, just raised its tariffs by 34% on top of its long-term ridiculously high tariffs, not acknowledging my warning for abusing countries not to retaliate. They've made enough for decades, taking advantage of the good old USA. Our past leaders are to blame for allowing this and so much else to happen to our country. Make America great again. This is what Donald Trump has recently said as of 6:49 a.m. this morning. The reason I say this is a transfer of wealth and the biggest one in history is because you have the opportunity to buy in at a bottom. We don't know if this is the bottom right now, but if the stock market consolidates and there's strength, there is going to be indicators of that strength. But right now, ultimately, the SPY is the strongest. In 3 to 5 years down the road, there will be a lot of wealth made on the SPY, or at least highly likely, like very likely, because it is an ETF and it's an index fund. And when you look at it, at 496, think about the recent high last year. People said at 600, 620, and 640 it was slightly overvalued. A fair value on SPY, considering future guidance, would be around 550 to 600 quite easily, and it's 496 right now. So in the long term of things, SPY is a very solid buy. But I'm not recommending to buy right now. Let's not jump into conclusions. We can see that the SPY has heavily resisted and stayed in the gap since Friday. If we can close today near the top of the gap, we are reversing. A change of character is happening. It tried to happen this morning, and now it's selling off a little bit. If we can close somewhere up here, this is what we call a change of character. And that means there is a turnaround. It's essentially a signal that it's turning around. We don't have enough volume or enough buying right now for that to happen. Not to mention Apple is kind of holding it down a little bit. As we can see, Meta is about 2.53% of SPY, and it is stabilized and it's up. Microsoft has a little bit more, like over 3.5%, but it is below the gap. When we look at Google, it's right at the gap, trying to stay above, which is pretty good, but it is only 1.92% of SPY. So in order to counteract Apple, we need Microsoft and Meta to be up to help keep the SPY up. That's how this works. However, SPY, Microsoft, Meta, very strong because Microsoft is not affected by tariffs like other stocks would be. They're a software services company. Meta, even more so. They're less affected. In fact, I would beg to argue that Meta might not even be as low as it is if they did not have this lawsuit going on. In fact, they probably wouldn't be because they're not as greatly affected by tariffs. Another great stock to really think about is Tesla, Ford, General Electric, Caterpillar. These are great stocks to look at, especially in a situation like now, including Coke. Ford is essentially down to 905, but there's only about a 40-cent drop over the past week. And between dividends and covered calls over the course of 2 months, you could make all of that back. You'd be at break even and long-term holding, which is where wealth is really made long-term. It's a safer bet because they'll be exempt from most tariffs because they're an automaker, and one that is, of course, American. So they will obviously have exemptions, just like Tesla on automotive, but Tesla more so because they're electric. But there's still some strength in Ford versus some other stocks in the market right now. Wayfair is holding strong. Google is holding strong, right at support. Affirm as well. Everything is holding in the pre-market today, and hopefully it can continue to work its way up. We need to see some good news, some interest rate cuts, but right now it's showing signs of a bottom, but it doesn't mean it's quite at the bottom yet. We have a lot to deal with. The fact is, really, can China withstand another 50% tariff? I don't think they can. If they do not negotiate with the United States, it's only a matter of when, not if. It's not a matter of if. If they don't negotiate with the States by April 9th, it's not a matter of if, it's a matter of when China will crumble. And they just can't handle losing their exports to America and being tariffed 114% or 84%. They cannot handle being tariffed 84%. With this additional 50%, it'll put China in a tailspin. It'll only get worse for them. And long-term, they go down, we go up, which is essentially what Trump wants. But it also hurts the global economy. It hurts us in the short term. Before April 9th, which is Wednesday, will China step in to have negotiation talks with the United States? If, and this is what verbatim what Trump said, that if he was willing to cut the tariffs or remove them, they would immediately go into talks with TikTok, and China would be willing to make any deal on TikTok. It shows you the power of tariffs. That's what I quote from Trump Very recently, a few days ago, he stated that. I believe it was on Air Force One. But there's a lot going into the market right now. Tesla is holding a very nice steady near the top of the gap. It's working its way to the top of the gap. You can see here that China continues to fall, and it has fallen over 1,800 points. They are down a lot in the last week. When you look at SPY, 1 week, 18%, 1 month, 14%, very similar, but we were on an uptrend, okay? SPY was on the up before this all happened. If we look at China's economy, it goes all the way back to May of 22. That's where we're at right now. And they've been in a downtrend since COVID. They have not recovered at all like we have. They are hitting the lows of January 22 just about. They're kind of in this range of where 22 was at its peak. And they have been in a downtrend, clearly, since Trump put tariffs on them the first time. This is unfinished business, so to speak. Look at this downtrend right here. China has been in a downtrend since 2018, since the first tariffs took place. This is what's going on right now, and now they're dropping yet again. Trump is essentially crushing them, and I'm not trying to come across as mean, but that's what's happening. And essentially, this leads the way for negotiations. Microsoft is looking strong. We have another green candle. Meta is looking strong, more green candles. Even SPY is doing the same thing. The VIX is kind of consolidating. There's a lot of uncertainty going on in the market. And what I'm looking for is I really want to see this VIX to close down below this. I want to see a change of character on the VIX, and I want it to close today or tomorrow down here at 35. Once we close below that, it's a change of character, and it shows that volatility is dropping. This is unlikely to happen until we see some form of resolve or some form of direction today, tomorrow, and Wednesday. But that's what I'm really looking for. Apple has a nice doji red candle here, and it looks like it's going up. So the markets overall today are kind of in an unknown. They rallied up the gap, way above the gap, and they've now pulled back to the middle or top of the gap, some at the bottom, but somewhere in the gap. We've kind of recovered back to Friday. The markets are kind of uncertain at this point. We have a lot to look forward to this week. Well, not really, but we have a lot of data coming in. We have the Fed minutes on April 9th, which Jerome Powell is likely to cut rates. This could happen. We're also looking at inflation data that's coming out on the 10th, Thursday. And then, of course, on Friday, we have the PPI month over month and the Michigan consumer sentiment. If all this is good this weekend, we get rate cuts, it is going to be great for the market. Jerome Powell has to do something on Wednesday, especially since Trump has now forced his hand yet again with 50% more tariffs to take effect on that same day, April 9th, on China. I'm not saying this is a buying opportunity yet, because it would be silly to say such a thing, but we are looking like it is at a bottom, and we're waiting for good news this week because interest rate cuts would be a positive thing. And if China comes to the table with something on April 9th, that would also be positive. Don't forget, guys, my free webinar this Friday, April 11th. It is going to be 6 p.m. Eastern, 3 p.m. Pacific. Link is in the information box below. I look forward to seeing you there and helping you understand a bearish market. It is my bearish and volatile and how to become profitable masterclass. It will show you and teach you the things that you need to learn that I'm teaching my students, which helps make them profitable and has helped make them so much money in the market and help them understand this current market and how to hedge and protect their portfolio. I look forward to seeing you guys on the next video or upload. Take care of yourselves, fam.